Welcome to Subramani. I'm going to talk to you about what worked for me as an investor. So, first is if you don't understand a business, stay away from it. It costs you a lot of money when you will look stupid where everybody else is investing. But for somebody like me who is investing just my own money, it doesn't really matter. So I did lose out on opportunity in shares like Infosys because I didn't understand. I bought Infosys, and since it doubled in 45 days or something, I sold off. After that, I bought Infosys much later. I still hold Infosys, but I did not ride that 100 listing price to about 1000, that kind of a thing I may not have held, but I held it from say 300 to 700 or 800. So that I held. So some portions you will hold, some you will not hold, but you have to be convinced about the story, and you have to be willing to learn at least a little bit as to how the business works, what happens, how they are earning money, right? And why it will work, why it will not work. Now cut to 2017-18, there is a new technology called blockchain and crypto. I don't understand. I will not invest in any company there. I will invest in a crypto the minute somebody launches a crypto fund. So suppose somebody were to launch a equity fund with little bit of crypto, I would be happy to buy it. Invesco was supposed to launch, and I don't know what happened, but there is no crypto fund in India, so I will stay away from it. So that is one thing which has helped me. A great investor, good investor is all fine, but if you have a 10-year track record, anybody can look good. To look good over 25 years, it requires a Naren or a Prashant Jain, because you have seen calamities, you've seen good timing, bad time, everything has gone through, and then you say, okay, this is great, this is a fantastic learning. But also remember, when they go through a bad phase, it's time that you believed. I keep saying this is like the Shirdi thing, you need Shraddha and Saburi. You need belief that these guys are capable of handling it well, and the patience to sit through bad times. So both of this helped me, and because I looked at their portfolio and then looked at my portfolio, I said, okay, this works, this doesn't work, this works, this doesn't work. And I always brought these things as a business. So when the price fell, to me it became more attractive to buy. If I were buying to sell it to somebody, then the fall would have hurt me and would have cost me anxiety, right? So some businesses you buy for dividend, and you know that the price falls and the dividend yield gets more attractive. At some stage you have to give up your foolhardiness and foolishness, and when the share is moving from value to value trap, then you have to be careful. This dialogue I've had with Parag Parikh about the Noida toll bridge. He said the dividend yield is attractive. I bought, but I sold out almost immediately, saying, look, this looks like, this doesn't look good. He held for some time, and I think PPFA is also sold off at a loss, but not getting into all that now. What else helps is to be ready that every plan will go wrong. Why? To me, the dividend income, having a low burn rate helps, because I know when things go wrong, I still will not have to worry about my day-to-day living, right? That does not bother me. Even during COVID, my low burn rate really helped. Then also understand that every product or a service, when it is started, hurts, and people laugh at it. For example, a completely non-market example, the idli dough which is available today in every shop, when it started, it must have been 2000, perhaps year 2000 or 1998 or something like that. The first thing was many South Indians said, who will go and buy it? We can make it at home, it's so easy, right? But then it got very popular. If you have guests coming home, you can just go and buy it. So the same people who ridiculed it are the same people who are buying it. I ridiculed the mobile phone, saying, who will pay 32 rupees for making a call? But I did not know that Dhirubhai will come and or Mukesh Bhai will come and make the call almost free. Voice is almost free today. You're paying for data, right? We don't know these things, but be ready for such opportunities which will be available. At the beginning of any business, there will be very many opportunities available, and at that time when you're investing, you have to invest more like a VC, saying, okay, I will put money in 3-4 companies, including Bharti. So if you invested in Bharti when it was available at 30 rupees or 40 rupees, you did well. Then of course there was a split and then the share price came down, but now it is again back to 800, 900, right? So to have put money only in Bharti would have been fantastic skill, because many of the other companies, HFCL, GTL and many of those companies have been wiped out, literally wiped out, and they have not done anything compared to what Bharti has done. So to be able to pick only Bharti would have been fantastic luck and super skill. But having put money in Bharti, you should have bought at every stage, which I did. So Bharti is one of the success stories in my portfolio. The numbers were just not adding up. People didn't believe the number of subscribers. It was not making profits. It could never have paid dividend. It had leverage. It had all bad things going. And even after it started doing well in India, it went and invested some money in Africa, which was a bad investment. Didn't really give good returns. But if you believe that the management is good, you stuck around with it, you made money. So similarly, you could have gone wrong with say Indigo. I started buying Indigo in March 2020 when I think I got it. The best price I paid for it is 800, right? So I've been buying for a long time, and now my average cost should still be something like 1700, 1800, because I've been buying a lot, buying more. And now I think the price is around 2500 or 2600, right? So you know that the numbers don't add up at all. The PE ratio, ROC, RONW, nothing adds up. But if you believe that the company is building market share, etc. Same thing for Zomato. Is it a company which I use? No, I don't even have the app on my phone. I use my daughter's app at times, and my daughter uses Swiggy and Zomato quite, she couldn't care a damn. But is Zomato building a market share? Yes. Are their volumes increasing? Yes. Will their volumes, is there scalability? Yes. Same thing for Indigo, right? Is there scalability? Yes. Are they scaling up? Yes. Are they scaling up well? Right. Do they have a 65% market share? Maybe 62% market share. Is there competition? Well, there is new competition perhaps in the form of Vistara. But I think Air India will be more international. So, is there competition in the way of Vistara? Yes, but Vistara with similar cost structures, in fact, cost structures being worse than Indigo, will not be able to beat them on price. So, Vistara, because it's not a listed company, will not tell you what are the margins, but Indigo, you know, their margins are reasonable. The recent results were good. So, it's a good time to continue with it, right? So, one more thing is the crowd is always right. I learnt it very hard when I tried to buy DHFL, because somebody was telling me that Diwan Housing is not doing too badly. Vadvans are good people, they will repay the loans. Believe it or not, they had 80,000 crore outstanding. They had repaid 55,000 crores when they realized that the government is anyway not going to allow them to continue. That's a different episode, right? So at some stage I had to say, okay, this much and no further, and then I sold those shares at a loss. So did this loss happen? Yes, it happened. Could the loss have been worse? Yes, of course it would have been. I exited at about 78 or 80 or something like that, and then the price fell down to 20, 22. It got worse. So yes, I did lose money. These things do happen. You can't always predict what is happening. You can always never get it right. So some of these things you have to be ready for. So your plan going different is there. So for example, 2024, I will move into some cash. I not because I think the market is high or anything, but I never look at the markets. I look at my particular share. If I bought a share and I think the valuation has gone ahead of what is justified, I would sell. And in 2024, I will be ready for a chance that the BJP government doesn't come back. Do I believe the BJP government will come back? Yes, 100% I believe. That's my political belief. But my investment belief is I have to be prepared for BJP not coming back. It could be somebody else. If somebody else comes, what should one do? It will be a great opportunity to buy. To buy, what do you need? You need cash. So you need to sit on some cash during such events, saying, okay, the other side is also to be heard. Don't just assume that because you want BJP to come, BJP will come. BJP may not come. 2004, it was not BJP who came, right? India Today did an article saying Vajpayee versus whom, because the other person was a question mark. Whoever thought in their wildest dreams that I.K. Gujral or Deva Gowda would become Prime Minister? Nobody expected them to become Prime Minister. Nobody expected Chandrasekhar and Charan Singh to become Prime Minister. But remember, all these things really happened, right? So similarly, things can happen, things can go wrong. Companies can do well for some time, do badly for some time. Be ready for all that, right? See whether you like the companies, because sometimes the numbers look good, but currently the best performing, fastest growing mutual fund or best performing mutual fund, at least in the short run, is a fund in which I will not invest, right? I look at their portfolio, but it does not mean I will invest in those. To me, it does not. To me, a process-driven older company is much better than a company which is, to me, high risk. I wouldn't put my money there. So when you're being a contrarian, you're just being irrational, you're being cynical, you're saying everything can go wrong, and you're seeing why is the market not seeing it. So that's very important. I'll give you one example and stop. There was this merger of a company called Liberty Chemicals with Coromandel International. There was a 20% arbitrage, not joking, 20% arbitrage. At a time, the only cost was brokerage, because there was no long-term capital gain. I kept on selling Coromandel International and buying Liberty, wondering why is the market not seeing it. It's very difficult to do that, right? But I did it, and I did it successfully. So when people ask questions like, but if you knew HDFC was good, why did you sell HDFC? It is very simple. It takes a long time. I started investing in HDFC in 1979, right? 78, 79, I bought at below par. 100 rupee share used to be available at 97, right? So I bought at those prices. But how do you know that this company is worth trusting? Today, don't talk like 2023, talk like 1980, right? So you're talking of 43 years back. I didn't know whether Mr. Deepak Parekh was the best businessman in India, right? So you have invested in Kapil Mehra's Orke, you have invested in Dhirubhai Ambani's Reliance and Mr. Deepak Parekh or H.T. Parekh's HDFC. How do you know which one should be held and which one should be sold? Because the ones which are going up are it's more attractive to sell that. But since I was looking at dividends, to me HDFC looked attractive, but I sold HDFC also because it was becoming too big a portion of my portfolio, and I was not doing it very scientifically. I said, oh, I put so much, it has become so much, let me sell a bit. Today I may be behaving very differently. So these are all things which you learn on the way. I'll make more such videos. I hope you like it. Please comment saying what of this you found very useful. Thank you.